Yoni Jacobs, why do you think gold is in a bubble that will soon collapse?
Well, aside from the over parabolic price increases that we've seen, where gold has run up from 1999 to 2011 from $250 to almost $2,000, which is 600%. We're seeing over speculation, massive publicity, and extreme expectations. So all these kind of come together just as in any other asset bubble, and at the same time we're seeing investor enthusiasm is peaking.
Sure, we're seeing a lot of commercials for gold on TV, but we're also seeing a lot of money printing going on around the world. How do you counter that with your argument?
There is money printing, which is a reason why people have bought gold as a currency hedge. However, the dollar has not, people haven't noticed that the dollar hasn't made a new low since 2008. So while people are saying there's rampant inflation, the dollar's falling apart, currency is being devalued, the dollar's still not making a new low. We're seeing inflation is not really picking up as people expected it to. We're seeing emerging market weakness. We're seeing commodity slowdown. All those things are stronger for the dollar, which makes gold a little weaker over the long term.
Well, there's worry about the euro currency breaking up. Nobody likes the yen, but so the dollar seems like it's the currency of last resort. Why not just get out of the pool and buy gold? That's the argument that a lot of people make about gold. It may not be a currency that you can spend, but at least you can hold it. You don't have to worry about all that paper money out there.
Yeah, well, people buy gold because it's a tangible store of value, and they say that it'll never become worthless. But if gold is in trouble, it might not become worthless, but it will be worth less. So instead of being worth, it'll never be worth zero, but it's been much less than it is today, and it will, with deflationary scenario, recession or selling, it will drop.
All right, so how do you make money by betting against gold? Do you like inverse ETFs? You just short it outright? Tell me how you do it.
So my favorite way to short it is the gold miners, GDX. To protect yourself and to potentially leverage that bet, but while also limiting the risk, I like the GDX put options. So far, the GDX have actually fallen a nice amount over the last couple of months. They're also lagging gold, which is another sign to me that gold is going to fall. So I would probably short gold miners, but as a balanced approach, I would go long as a pair trade together with that, either diamonds, natural gas, or platinum.
So you think gold is on its own. You don't think that what you're saying in terms of gold being in a bubble also applies to the other precious metals like palladium, platinum, and even silver?
I think it applies to all commodities almost. And even though gold has been stable and it might fall less than other commodities such as sugar, corn, sugar, cotton already fell a lot. Silver is more volatile than gold, so if they fall, they probably will fall together. Silver could fall more. But as a short, I would rather short something like gold where I'm more certain that it will fall and less risk on the upside.
So there is a correlation.
There is definitely a correlation. Yeah.
Thanks a lot.